Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. Before we get into our intriguing content today, please join me in welcoming our featured guest and repeat offender on Ron Siegel Radio.
Good morning.
Travis Robinson is in the house. Good morning, senor.
I'm back.
He's back. Glad to see you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
You know better than that.
While I have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we are celebrating today. We celebrate every day on Ron Siegel Radio. National Corn Chip Day. I don't know. I guess Fritos are a corn chip, so if you've got some good salsa, not spicy. I don't like the real hot stuff. But corn chips, National Corn Chip Day. I was looking, and, I don't always look at this, but today I just happened to be looking at birthdays. And today is the birthday of W.C. Fields. Now, I know there's a lot of people that don't even know who W.C. Fields is. And yes, I think he died right around the time that I was born, but give or take. But he did have one of my favorite quotes. And I shall share that with you now because I am the host and I can. So it goes like this. 'Twas a woman who drove me to drink, and I never had the decency to thank her. Well, I thank my wife every day, so it's but being that she doesn't listen, I can tell sometimes driving to drink is the direction. Hey, and don't forget, if you're watching us, if you like that quote, just hit the like button or comments, any of the above. We'd love to see who's checking in. Tell us where you're checking in from. If you're listening to us on radio in the afternoon, just holler at us where you're at. We'll hear you. Let's take a look and see what the markets are doing today as we speak. So we've got the Dow Jones Industrial Average down 30.64. The NASDAQ is down 425 points. I will tell you that it's not a good sign. Microsoft is accounting for a good portion of that. Microsoft down drastically this morning. So the NASDAQ is down 427, driving the S&P down 52.94. Oil's up $2 a barrel. Yeah, it looks like there may be some conflict coming up in Iran. So if they've got that strait closing up, that could be problematic for oil. Probably give us another reason for California to raise gas prices once again. We do have the highest gas prices in the country, next to Hawaii, but Hawaii doesn't make any gas. And ironically enough, I was just saw a report yesterday that, believe it or not, California has the largest oil reserves in the country. Yet, where do we get our oil from? Iraq. Think about that one. But that's Gavin.
Such an idiot.
Yeah.
Such an idiot.
Okay, so gas prices right now, let's see if we can look at them. I don't know if we really want to look at gas prices. The national average for a gallon of gasoline is $2.87. $2.87. Right here in California, we're at $4.27.
Right.
So is that where you're? I paid, I think, $3.99 2 days ago.
I don't even look. I just fill up and submit my receipts.
Yeah, I submit my receipts too to my bank account. We got no budget on Ron Siegel Radio, so it's you gotta love it. Okay, so let's I'm not a big fan of this one, and I do get political. I don't care. So the president right now is looking at all kinds of things. Now, if you've ever read the Constitution of the United States, and I know most schools don't even teach it anymore, but there is a clause in the Constitution. It's called the Supremacy Clause. And that basically says federal laws supersede state and local laws. So we've got these California legislators who think that they're going to write laws that are going to override the feds. But that's not what I want to get into today. What I'm going to really talk about is the president has found some areas of law that he actually can go in and say the federal government is going to regulate the permitting process and zoning process because California hasn't got the permits and zoning done properly yet for the Eaton fires and the Palisades fires after a year. Now, the federal government usually takes 6 to 8 months to get their zoning done. They got it done in 20 days, 20 days from the date of the fires. Yet Los Angeles and California still haven't got the people the permits. Now, I know the insurance companies are, they're needing that to get the insurance money as well. But the president said that they're going to go and take a look at that and take over and bypass California and Los Angeles and the environmental groups and get these people the ability to start building their houses back again. Love to see that happen, although I don't like the executive order stuff. And what did he come out with 2 days later? Well, he's going to look at the amount of gouging. Now, we always hear Gavin Newsom talk about oil companies gouging us in California. Yet 26% of our gasoline prices go to taxes and fees. 26%. Now, I do some math every once in a while. Leading a lending team, we have to do some math. If we look at $4.27 a gallon right now, 26% of that is probably going to be right around $1.10 a gallon is going to taxes and fees. So the president is going to go out and say they're going to put a limit onto what the taxes and fees can be on gasoline. He thinks they can get the gasoline prices down to $2.50 a gallon in California. $2.50 a gallon. Now, think about $1.10, and Gavin's talking about the oil companies gouging. Now, if they're gouging the people, do you think that would be the reason why Valero left the state and Chevron's planning to leave the state? Maybe it's the California bureaucracy that's forcing these places to leave. I don't know, but I'm just a local radio guy sharing my thoughts with you. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, mortgages in retirement. We're going to talk about that one. And we're going to also, and that's why retirees lose $100,000. $100,000 with a mortgage decision. Yeah, you can blow it all you want, but a lot of people do because they like that 3% or sub 3% mortgage. Why so many homeowners are downsizing right now. And we're going to talk about group health benefits with our favorite group health benefit educator. Travis Robinson is in the house. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ. As the economy slows, do you know anyone worried about job loss? At Siegel Lending Team, we offer the Home Select Loan. Think of it as a financial superhero cape for homeowners with good income and credit. It not only saves your home, but also throws a life ring to your credit score. Because who needs stress when you can have peace of mind? Let's secure your future with a smile. Visit rsrhomeselect.com. rsrhomeselect.com. NMLS 217037.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They only tell us the number you put in your mortgage calculator to determine your principal and interest payment. What did rates do yesterday? Well, we told you we were all waiting for the Federal Reserve. And you know my thinking about the Federal Reserve.
Such an idiot.
Yes, I know. And I prove it every time. Conventional 30-year fixed rate up 6.064. Jumbo 30-year fixed down 6.324. FHA 30-year fixed 5.94. That was up. VA 30-year fixed 5.896. That was up. And the USDA 30-year fixed 5.947. That was down. And remember, those numbers are the number you put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, well, simple. rsrlinks.com/calculators. We've got a whole suite of about 60 calculators. rsrlinks.com/calculators. If you want to know whether you want to pay off your mortgage faster and keep your liquidity, there's a calculator for that. What's your payment? There's a calculator for that. Blended household interest rate. That's taking your mortgage rate along with all of your other debts, auto debts, student loan debts, personal loans, credit cards, to determine what your blended household interest rate is. Yeah, I know you got a 2.5% interest rate on your mortgage, but you put the 22.84% credit card interest on there. Your blended rate might be a bit higher than that. So go to the calculators. And we do put out our commentary about the markets each and every business day morning as early as that allows, rsrlinks.com/HBOD. What are the markets doing right now? Well, we've got the S&P 500 is down 40 points. Put my glasses on so I can see it here. Down 41 points. 10-year Treasury, it is flat, 4.242, no movement at all. Mortgage bond is down 4 basis points. Remember, bond down, rate up, not moving a whole lot there either. What's driving it? Well, it was all about the Federal Reserve, their commentary yesterday. Again,
Such an idiot.
you know, it drives me bananas because Jerome Powell came out and did their press conference that they do all the time. So they came out and they said they're not changing the interest rates. And in their commentary afterward, he came out and said, we're worried about inflation. I wonder what inflation he's worried about. Because as I've shared with you, he's just not living in a real world. So the Federal Reserve uses numbers from the Bureau of Labor Statistics, which is always delayed and always wrong. So they came out and they said the personal consumption expenditures, 2.8%. Truflation is using real-time inflation numbers, 1.63%. Now, I know that your cost of beef is still high, but that's a carryover from the prior administration. You're not going to get those prices going down. You just hope that they don't keep going up at 9% a year. 1.63. The Federal Reserve, they claim that their part of their mandate is to get price stable, which they say is 2%. Well, at 1.63, Jerome, that's less than 2%.
Such an idiot.
You should be able, with your budget, to be able to figure out how to, oh yeah, they don't have a budget. They print money. You should be able to figure out exactly how to get real-time data instead of giving us the old stuff. So again, they left rates the same. Waller and Mirren were dissenting because they wanted to see a 25 basis point cut. At least we got two people that have a brain there. The Fed upgraded their view on the economy, likely due to stronger GDP numbers. We've been telling you that. Downgraded their fears on the labor market. The same day that Amazon's laying off 16,000 people and UPS is laying off 30,000 people. Oh, there's no problem in the labor market, according to the Federal Reserve. That's not what the consumer confidence report is saying. Job gains remain slow. Unemployment rate has shown signs of stabilization. Translate that, it's only going up 0.1% each time they report. Fed clearly obsessed with inflation above 2%, but in the press conference, Powell explained they expect services inflation to move lower due to housing, and that the goods inflation was due to temporary tariff impacts. You got to love listening to Powell. I mean, he is unbelievable. He thinks the labor market will do better because of stronger GDP, but we may not see that with the increase in productivity and the rise of AI. Additionally, Powell even said that he thinks the labor market numbers are being overstated. So he tells us that they're overstated and then tells us they're not worried about it. However, if we look, Apartment List came out with their numbers supporting the disinflation in housing, which makes up a huge part of the inflation report. Latest data from Apartment List, they showed that in January, new rents continued to decline, this time by 0.2% year over year. They're down 1.4%, which is a bigger drop than the previous reading of 1.3. The lease time has risen to a record high since they started tracking it, which is causing the vacancy rate to be 7.3%, also a record high since they started tracking in 2017. This shows that the shelter inflation numbers should continue to improve. Productivity rose 4.9% in line with the previous third quarter reading and with estimates. This comes off quarter two, which was also strong at 4.1%. Much more productivity, meaning unit labor costs are declining. Jobless claims came in, so we got that number. Initial jobless claims, 182,000. The forecast was of 186,000. So, I'm sorry, that's the continuing claims, 1.82 million versus 1.8286. We got 209,000 jobless claims, and the forecast was for 205,000. So you look at some of these numbers, and we also see the trade gap. That one's improving also, down 56 billion. That's the effect of tariffs. So all these things are showing that Waller and Mirren are right, and we should be decreasing the Fed funds rate. But we've still got Powell as the chairman.
Such an idiot.
Yes,
Such
he
an
is such
idiot.
an idiot. That's the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. So our favorite group benefits educator, Travis Robinson, is in the house. Koru Risk Management.
Yeah, I got recruited over to a new firm.
So he's the coach, and he got recruited.
Yeah, well, yeah. So we're a bigger firm. They
$6 million man.
Six. They
Bigger,
wanted
faster, stronger.
Well, I'm getting bigger and slower. That's for sure.
Okay.
No, but Koru, they do a lot of things: risk management for groups, workers' comp, general liability, P&C, auto.
Oh, you got to back up. What is P&C?
Property and casualty.
Oh, okay.
So I don't do any of that. So they have me come over and they want me to head up their employee benefits division. So I'm doing the same thing, just for a larger firm. And we now will in-house, we can handle, the workers' comp, the general liability, fleets, auto fleets. But I don't do that. That I would hand that off to my team. I just joined a bigger team.
But we can still call you for it, and you'll just give us the right person.
100%. Yeah, we've got several producers that do that. But again, my role is the same. I do employee benefits. I specialize in group health insurance. I don't want to get licensed for the other side of things. I want to be good at what I do and specialize in.
I've got this line because there's a lot of real estate agents that are getting into lending, and vice versa. And my commentary is, what happens when you try to catch two rabbits, right?
Yeah,
you get neither one.
You get neither one.
So, focusing on what you're good at and staying in your lane makes a whole lot of sense to me.
Well, it's just, if you're the smartest person in the room, find a different room.
Right.
And that's what I'm doing.
That was not from W.C. Fields.
I'm just, I'm putting myself in a room full of people that do other things, that are smarter than me, that give me an opportunity, set me up in a position to be successful. And that's really the end game, right? Is what do I want to do? I want to grow. I want to get bigger. I want to go after larger clients.
So let me ask you this, because I know that, last year, halfway through the year, I changed lending affiliates, and the same basic thing. And my comment to people all the time, and I think you probably have the same scenario, is people really, when they call Ron Siegel Radio, they call Ron Siegel, they don't really care what the name of the sign is, right? They're calling to talk to me because they want the information or whatever they're getting from me. Right. Is it the same thing in the insurance world? They're calling because they the benefit they get from talking to you?
Well, yeah. So, the rates are regulated by the state of California.
Right.
Small group, anything under 100. If you have under 100 employees and you have health insurance, it's regulated by the state of California. So
that's a surprise that the state of California regulates.
So if you're a 50-year-old male that lives in Brea, California, and you're going to be on an Anthem, a Kaiser, a Blue Shield, that rate is the rate. There's nothing we can really do about it. So then it really comes down to, there's, like we've talked about it before, there's other networks that we can look into that'll save you money. Like, for instance, I'm on a reduced network. My family's on a reduced network, which means it's just in a radius. So the doctors that I can see are in a smaller radius, but all of them are at St. Jude and Fullerton. So why would I pay the full network rate when I can pay a smaller network rate and save myself, save my wife, their employer, about $400 a month. So there's ways to manipulate it or not manipulate.
Let me ask you a question with that. So, I live in North Orange County, but the doctors that I frequent are all out of Hogue.
Yeah. So what you'd want to do is make sure that.
Could I be in a reduced network in the Hogue area?
If you're on a reduced network, if they accept Hogue, then you can go to Hogue. But
okay,
if like, for instance, our enrollers would sit down with all their employees and say, what medications are you on? What doctors do you need to see? What affiliates are they with? And then we'll do that research and we'll be like, all right, you could be on the reduced network, or, two of your doctors are outside of that reduced network. We advise you to go on the full network.
Okay.
So there's ways around it. If you get over 100 employees, that's when it can then you can negotiate with the carriers and you can kind of, go back and forth. You can negotiate lower rates. You can negotiate for tech credits. You can get, so it gets a little funner on some of the larger groups.
Now, there's a lot of things going on, and I'm not going to put you on the spot with them because I follow the politics and the legislation, but I want to get into that. I'll share my thoughts on it in the next segment. When we come back, you're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. Most retirees lose $100,000 with this mortgage decision. Are you making the decision? We'll see. Why so many homeowners are downsizing right now. All that and more. Reach me anytime. Off-air number, 800-306-1990. 800-306-1990 or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel's numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ. As the economy slows, do you know anyone worried about job loss? At Siegel Lending Team, we offer the Home Select Loan. Think of it as a financial superhero cape for homeowners with good income and credit. It not only saves your home, but also throws a life ring to your credit score. Because who needs stress when you can have peace of mind? Let's secure your future with a smile. Visit rsrhomeselect.com. rsrhomeselect.com. NMLS 217037.
You're
Welcome
listening
back
to Ron Siegel's
Radio.
Home
In
and
every
Finance
market, there
Show
are
with local and
solutions.
national
Most
expert
opportunities.
Ron
You just
Siegel.
need
Now,
some
here's
trusted
Ron.
Guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Why so many homeowners are downsizing right now. For a growing number of homeowners, retirement isn't some distant idea anymore. It's starting to feel very real. According to Realtor.com and the census, nearly 12,000 people will turn 65 every day for the next 2 years. Jeez, I think I'm one of them. And the latest data shows as many as 15% of those older Americans are planning to retire in 2026, and another 23% will do the same in 2027. If you're considering retiring soon too, here's what you should be thinking about. Why downsize? Now's the perfect time to reflect on what you want your life to look like in retirement. Because even though your finances will be going through a big change, you don't necessarily want to feel like you're living with less. But odds are, what you do want is for life to feel easier to enjoy, easier to manage, easier to maintain day to day. The top reasons people over 60 move, you can see these benefits show up in the data when you look at why people over 60 are moving. The National Association of Realtors, NAR, finds the top 4 reasons aren't about timing the market or chasing top dollar. They're about lifestyle, being closer to children, grandchildren, or longtime friends, so it's easier to spend more time with people who matter most. Wanting a smaller, more functional home with fewer stairs and easier upkeep. Retiring and no longer needing to live near the office, so it's easier to move whenever you want. Opting for something smaller to reduce monthly expenses tied to utilities, insurance, and maintenance. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk, AM 1490 and FM 98.1 video feed, you are seeing a chart of why people over 60 move. And we've got the 60 to 69 age bracket, the 70 to 78 age bracket, and the 79 to 99 age bracket. They don't have that 150 and over age bracket. I don't know why. No matter the reason, the theme is the same. Downsizing isn't about giving something up. It's about gaining control and choosing simplicity. And it brings peace of mind to know your home fits the years ahead, not the years behind. And the best part, it's more financially feasible now than many homeowners would think. The number one thing helping so many homeowners downsize, here's the part that makes it possible. Thanks to how much home values have grown over the years, many longtime homeowners are realizing they're in a stronger position than they thought to make that move. According to Cotality, the average homeowner today has about $299,000 in home equity. And for older Americans, that number is often even higher, simply because they've lived in their homes longer. When you stay in one place for years or even decades, 2 things happen at the same time. Your home value has time to grow, your mortgage balance shrinks or disappears altogether. The combination creates more options than you'd expect even in today's market. So whether you just retired or you're about to, it's not too soon to start thinking about what comes next. Sure, it can be hard to leave the house you made so many years of memories in, but maybe it's time to close one chapter to open a new one that's just as exciting. Bottom line, downsizing is about setting yourself up for what comes next on your terms. If retirement is on the horizon and you've started wondering what your current house and or equity is, and that could make possible, the first step isn't selling, it's understanding your options. Let's talk. A simple, no-pressure conversation to help you see what downsizing might look like and whether it makes sense for you. Figure out what your property's worth. rsrlinks.com, rsrmoney.com, rsrmoney.com. That's the Real-Time Real Estate segment, again, brought to you by rsrmoney.com. We continue our conversation this morning We're chatting with Travis Robinson about group health benefits, and where you stand. What's going on with your family? And I was saying to Travis during the break that I've been watching proposed legislation. I don't get it political with Travis, but I do. That there's proposed legislation that they're talking about, and the idea being to be able to buy insurance across state lines. Now, I don't know about you, and I know this is, Travis already told us it's not what he offers and educates on, but is your car insurance going up? Is your house insurance going up? Is your health insurance going up? Is the profits from the insurance companies going up? Well, all of those things can be addressed if we get rid of the limitations of state lines. If you could start buying insurance cross state lines, it brings in more competition. I have a friend that gets great insurance, way, way better than what we have in California, because she still has her residence in New Mexico. So her insurance is based out of being in New Mexico because that's where her legal residency is. Interesting stuff, right? So let's continue our conversation because Travis, when you talked about before about moving to a bigger company, when I made my move, it opened up a world to me because I was then able to go direct and talk to investors and get educated and find out about their products. And when you move to a bigger company, do you have more options or people coming to you then as with a smaller firm?
No, I think the biggest thing is I've got more salespeople in my office with me that are, reaching out more, which gives me more opportunities, right? More at bats is what I need. And the opportunity to potentially cross-sell, right? So if there's another agent who's selling workers' comp, general liability, to a business owner, and then in the flow of the conversation, it's like, oh, well, what are you doing for your current benefits? Oh, well, we've got 50 employees. Well, talk to Travis, so and vice versa, right? So any of my current clients, I never really talk to them about their other side of their business, right? Their other coverages that they might want. So at Koru Risk Management, we want to take the risk and manage it for everybody. We want to, and there's a lot of risk on the employee benefit side when it comes to employee handbooks, a lot of compliance bullshit that we have to deal with, right?
Oh, you can't say that on radio.
Sorry. But it's just a lot of things that the business owners don't know, right? They're busy running a business, managing people. So let us take a look at, make sure they're in compliant, right? And there's a lot of good compliance training that they need to do, sexual harassment training, workplace violence protection plans. These are things that were put into place because they are important. Now, there's a lot of things that probably you have to jump through some hoops that you could probably get rid of, but there are good trainings out there and there's good things that let us take a look at that, right? Let us make sure you're in compliant. And now my tools just got a lot bigger. I can help them with their workers' comp, general liability, auto, all those things.
Now, when I had my company 25 years ago, we had 55 employees. Obviously, things were different back then. But one of the comments that came about was it's a lot more efficient if as a business owner, if all of your coverages are at one place. Is that really the case?
Well, there's no major discounts. I mean, on the health insurance side, there's some carriers that'll give you a discount if you have, like dental, vision, life.
I wasn't looking as much at the discount as the risk management. It's a lot easier to say, if you're packaged all at one place or one person's overseeing it or one company's overseeing it, there's none of that he said, she said. Well, if this isn't my coverage, you got to go to John because that's his coverage.
So I would say yes and no, but it depends on which company you're with, right?
Okay.
So I think at Koru, we do a really good job. There's a lot of accountability, right? So if we tell you we're going to do something, we're going to do that. And I really can't say that about a lot of other agencies. I've been in the industry for a long time. I've been recruited by a lot of agencies. I'd always have a conversation with someone. But at the end of the day, you go to some of these really large firms and there's not a lot of accountability because number one, the sales rep that you sign up with, he's going to be there for a year or two and then he's going to bounce. He's going to go to another agency, right? Where with us, the owners, it's a newer company. It's 5-6 years old, but they brought in people and they built a culture that people are going to stay there. They're going to want to be there, right? They brought in a fabulous account rep for me, Coco. She was there before me, but And like for an instance, you're going to get my cell phone. You're going to talk to Coco that handles your employee benefits, and there's accountability. So if we tell you we're going to do something, and if we don't do it, you can absolutely call us out on it, and we're going to we're going to be responsible for what we say we're going to do. So having all that risk under one roof, I think if you're with the right firm, absolutely, we could do a lot more for you. We can eliminate a lot of your headaches that you might not even know are out there, but potentially create massive headaches.
Yeah, you and I have talked about this before, where there's so many people have no idea because we're business owners, right? We're busy running our business. We might be experts in import export or automotive or whatever. That doesn't make us an expert in benefits and what the laws are,
right? And
HR laws.
I haven't seen it much where the government says or compliance comes in and goes, "Oh, you didn't know? Okay, like here's a free pass."
That's
right?
It's
not a yeah. So, and I've said it before. I probably said it on the show. Business owners don't know what they don't know.
Sure.
Right. So I have a whole compliance calendar that shows you, okay, 2026, January, February, March, it shows you what needs to be done, when it needs to be done, and potential penalties. So I can make that calendar available, but why not have someone take that off of your plate, right? I mean, there's still steps that you're going to have to do with your employees, but we can prompt you. We can say, hey, this needs to get done, and here's the potential fine that you're going to be hit with if you don't get it done.
And you say you could be hit with a $20,000 fine, and it's pretty motivating, right?
Yeah.
That comes right off the bottom line.
Yeah, we want to be proactive, right? Not reactive. So, and that's our goal. That's what we're really good at.
It's great information. We love the idea of being able to get educated from somebody that knows. You got to know what you're doing, right? I mean, and again, if you don't know what you don't know, you think you're doing all these right things, and I've even experienced in owning a business things that are that I looked at as being right from a human standpoint were against the rules and regulations from the state. And you look at that and you say, okay, well, I didn't know that I was breaking the rules because I was doing what is a good human.
Good human, a good gentleman. You can get in trouble for giving someone a hug if it's not appropriate. Where, just in my heart, I feel like it's the right thing to do. But is it the right thing to do according to some laws? I don't know. I mean,
telling a pregnant woman that she shouldn't be picking up a 70-pound case of paper when there's other people that can do it. It's against the rules, but it's a good human. So, you just have to watch out for those things.
Sure.
You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, most retirees lose $100,000 with this mortgage decision. Most pre-retirement people lose even more. We'll talk about it when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. You can reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ. As the economy slows, do you know anyone worried about job loss? At Siegel Lending Team, we offer the Home Select Loan. Think of it as a financial superhero cape for homeowners with good income and credit. It not only saves your home, but also throws a life ring to your credit score. Because who needs stress when you can have peace of mind? Let's secure your future with a smile. Visit rsrhomeselect.com. rsrhomeselect.com. NMLS 217037.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The what do we Borrow Smart segment today, brought to you by GetHomeSelect.com, GetHomeSelect.com. Picture this. You're 62 years old with $300,000 sitting in the bank. Your mortgage payoff, also $300,000. Everyone's telling you to pay it off and retire debt-free. What if I told you that decision could cost you over $100,000 in just 5 years? And what if there's a third option nobody's talking about that could have your home paid off in under 7 years while keeping your money liquid? I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, we're tackling one of the biggest financial questions facing retirement age homeowners. Should you pay off your mortgage before you retire? Here's what most retirement planners get wrong. They're so focused on eliminating debt, they forget about liquidity. And liquidity is one of the three critical factors in our framework: safety, liquidity, and return. Let me share a story about a couple I worked with. They had that same $300,000 decision to make. Everyone in their family told them to pay off the house, be debt-free in retirement. They said, sounds great, right? But we ran the numbers through our total cost analysis model. If they kept that $300,000 liquid and invested in a modest 6% return over 5 years, they'd have over $400,000. Yes, they'd still have the mortgage payment, but they'd also have $100,000 more in their pocket and full access to their capital if they needed it. Now, I know what you're thinking, but Ron, what about mortgage interest I'm paying? Great question. Let's talk about the household blended interest rate. Before you rush off to pay off a 4% mortgage, look at the rest of your debt picture. Got credit card balances at 22%, car loans at 8%. That's where your money should go first. It's not about eliminating debt. It's about managing it strategically. I had a listener call in a few months back, 65, had been paying extra on his mortgage for 15 years. And he was proud he'd almost paid it off entirely. Then his air conditioning died, $12,000 to replace it. He had to take it out of his retirement savings and got hit with taxes on the withdrawal. If he'd kept more liquidity instead of throwing extra dollars at the mortgage, he could have handled that emergency without touching his retirement accounts. That's the real cost of tying up your money in your house. Your home has value, sure, but you can't pay for a new roof or cover medical expenses, student loans, college, weddings with home equity unless you borrow against it. And guess what? At 65 or 70, qualifying for a loan gets harder and the terms get worse. But here's where it gets really interesting. There's a third option that most people approaching retirement have never heard about. It's called a first lien HELOC, and it comes with the best of both worlds: aggressive debt payoff and maintained liquidity. Let me walk you through how this works with a real example. A couple came to me last year. They were 63 and 61, still $250,000 on their home at 5.5%. They had about $6,000 a month in positive cash flow after all expenses. They were on track to pay off their traditional mortgage 18 years, well into their 80s. We looked at the Wealth Builder program. Now, the HELOC rate was actually higher than their mortgage rate, 7.25%. Most people would stop right there and say, Ron, that's a terrible deal. Here's what they don't understand. With a first lien HELOC, the interest is calculated on your daily average, not the full loan amount. When you deposit your income directly into the HELOC every month, it immediately reduces the balance you're paying on interest. Then you'll pull out what you need for expenses. We ran the numbers. That couple could pay off their entire $250,000 mortgage in just under 6 years. Total interest paid about $48,000. Compare that to the current mortgage where they'd pay another $97,000 in interest over 18 years. The effective interest rate ended up being under 2% because of how their cash flow worked against the balance every single month. And here's the kicker. They maintained full access to that equity the entire time. If they needed $20,000 for medical expenses or wanted to help their grandkids with college, they could pull it right out. Try doing that when all your money is locked up in home equity. Now, some of you are thinking about mortgage interest deduction. Here's the reality. That deduction matters less than you think, especially as it gets closer to paying off your loan. The further along you are, the more each payment goes to principal and less to interest. So you're actually deducting less from your taxes each year. And with the standard deduction where it is today, most retirees aren't even itemizing anymore. So the strategy, let's be clear. I'm not saying everyone should carry a mortgage into retirement, and I'm not saying the Wealth Builder strategy is right for everyone. Some situations still call for paying off the mortgage the traditional way. If you've got high interest debt handled, plenty of liquid reserves, a very limited cash flow, and you sleep better without any mortgage at all, then paying it off might make sense for you. But here's what matters most. Strategy beats rate always. It's not about whether you have a mortgage or don't have a mortgage. It's about whether your approach serves your overall wealth building strategy while maintaining safety, liquidity, and return. The question isn't, should I pay off my mortgage before I retire? The real question is, what's the best use of my capital? How do I maintain liquidity for unexpected? How do I get out of debt as quickly as possible without sacrificing financial flexibility? Let me give you 3 things to think about before you make any decision about your mortgage retirement. First, what's your household blended interest rate? At all your debt payments and all your balances gives you a true picture of what you're paying to borrow money. rsrlinks.com/calculators has that blended calculator in there. Second, how much liquid capital do you have access right now? If you pay off the house, how much is left for emergencies, opportunities, or unexpected expenses? And how easily can you get to that liquidity if you need it later? Third, what's your monthly positive cash flow? This is the key to the Wealth Builder. If you've got significant cash flow after covering all expenses, that money can work incredibly hard to eliminate your mortgage debt while staying accessible. I've been doing this since 1983. I've seen thousands of families make this decision. The ones who build the most wealth in retirement aren't the ones who rush to pay everything off. And they're not the ones who ignore their debt either. They're the ones who understand suitability, not just eligibility. They're the ones who manage their debt strategically. If you're approaching retirement or already there and you're trying to figure out the right move for your mortgage, let's look at your complete picture. Visit rsrlinks.com/keysteps, rsrlinks.com/keysteps, and get your financial house in order with a comprehensive analysis. We'll look at your safety, liquidity, and return. We'll build a strategy that works for your specific situation. Want to learn more about the Wealth Builder First Lien HELOC program? Head over to gethomeselect.com for an in-depth information about how this strategy works and whether it makes sense for you. Remember, it's not about having the lowest interest rate. It's about having the best strategy, and strategy beats rate always. Thanks for listening. I am Ron Siegel, your certified liability advisor, helping families build wealth in strategic debt management. And that is the Borrow Smart segment brought to you by gethomeselect.com, gethomeselect.com. Continuing our conversation, Travis Robinson is in the house talking about benefits.
Benefits.
We like benefits.
So exciting.
Well, you know something? I think that it's probably the most hidden number when we go and make a job decision, right? Because unless they're using a company like yours, Travis, people look and say, well, I want, health care and retirement and 401k and all these other things.
Sure.
But I can't quantify that.
Right. Yeah. We have a tool. Good tip. We have a tool, total compensation reports, right? We call it the hidden paycheck. So if you're working for a company, they offer you $80,000 in salary, but they also offer to pay for medical, dental, vision, 401k.
I've seen some companies that offer an auto benefit, right?
Auto, yeah. I mean, I think so. We have pet insurance, long-term disability.
I haven't seen auto insurance, but I've seen where the companies will give somebody a automobile stipend.
Yeah, 100%. Yeah. So we can put that into our total compensation reports, and it really quantifies what is the company paying for you. So it's great to attract and retain talent. People come to you at an annual review and say, hey, I need X amount more money. And it gives you the ability to show them like, hey, not only are we paying your salary, but we're also contributing towards these benefits. So it's a huge tool.
So just as a guess, and maybe you don't even know this, it's not been a big deal, but say I'm making $40,000 a year and I've got a benefit package on top of that. It's going to bring me up to $50,000, $55,000.
Yeah, more. It would depend on what the the company contributes towards your medical, towards all those
So
benefits.
all the different benefits. Every
Yeah.
company is going to be different.
Every company's going to be different. They have to contribute to the employee for state law, but they don't have to contribute for dependents. But so
as far as for insurance,
yeah,
for health insurance.
Yeah, for health insurance.
Okay.
Right. And they don't have to contribute for dental, vision. Those are voluntary, or they can make them voluntary. If you have a good package or a good benefits package, then your company's going to pay for all that. So, I mean, at Koru, I moved my personal and my kids over to Koru because where my wife works, they're awesome, but this benefit was a little bit richer. So
So you can go back and forth.
You need usually a qualifying event, or you can add, my benefits were offered to me. So I was able to come onto my plan and pull mine off of my wife's. We had to show my wife's work that, hey, they have insurance somewhere else to pull it off, but you can make changes.
So can you do that at open enrollment or just
Open
at a
enrollment.
qualifying event?
Open enrollment and qualifying event, right?
Okay.
So Koru's open enrollment isn't, I don't even know when it is, to be honest with you, but I was hired January 1st. So my benefits were available February 1st, first of the month following hire. So that's when I jumped on. So you can make changes, open enrollment or with a qualifying event.
Okay. And are you still doing everything with the electronic enrollment and all that stuff that you've done before?
Yeah, online. So we eliminate paper.
Okay.
We'll come out and we'll sit down and educate your employees. You really want to educate your employees or have us educate your employees. You don't need to do that, or you don't want to do that because of HIPAA rules, regulations. You don't want to know what medications people are on, what doctors they need to see.
And then I have to get into all that security stuff that you guys do.
Yeah, you just let us sit down. We can really, if you're still using paper, we see it all the time. If you're doing paper and you have multiple applications, that'll take 30, 40 minutes, right? With our system to streamline it, it's paperless. We can get an enrollment meeting down to 7 to 8 minutes.
Wow.
People will have questions sometimes, but on average, typically if you have a young male and he's just like, what do we have? What do we offer? You can boom, boom, boom. And we're going through that. They're not inputting anything. They're not inputting their name, their date of birth, their socials. We have that preloaded. So then you're just going through it and saying, is this correct? Is this correct? Oh, you know what? I moved last month. Can you update that? We update it in our system. It then updates into the employer system. So it helps speed up the process. And then all they're really doing is looking at it, picking a plan, acknowledging it, and then digitally signing it. And then,
well, that young male that you just talked about, he's probably just saying, what's the cheapest one? Because I have to have it. And
right. But if and then you'll get some gentleman like, I need to talk to my wife. Okay. What's it to add my daughter? Okay. What's your daughter's date of birth? Boom, 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 plug it in, and it pulls it up immediately. So it shows you the pricing right there, what it is per paycheck, what's going to come out, how does it affect.
It's nice and easy.
Super simple.
We like the easy button.
Yeah, for sure.
And then on the business owner's side, you're taking a lot of stuff off their plate and keeping them compliant, so there's less risk.
Yeah, we love blue collar, so we work with a lot of manufacturers. So pulling their people off of the floor means time that they're not working. So we'll sit down with them, boom, 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 and we could do a group of 50 to 100 in one day.
Wow.
Yeah.
And so and if you're doing it fast enough, there's 7-8 minutes instead of 30 or 40 minutes. That's a lot better on the productivity side.
For sure. And it streamlines it. And then once you submit it to the carrier, if you're submitting paper applications, that could take 2 weeks to get approved. Ours will take 48 hours business days.
Automated underwriting.
So you submit all the applications, right? Everything to the carrier, to Anthem, Blue Shield. And they want to go through, they want to look at social security numbers. They need to create your ID cards, right? They need to get the information in there. So if you're doing paper, is that a 7? Is that a 1?
Sure.
You're looking at everyone's different handwriting. With ours, it's all on the computer. So, and it's, you can't go onto one page until that page is completed. All the information is filled out correctly. So it just speeds up the process.
So it's got all the checks and balances in there.
Yeah.
Well, we're gonna have you back on and talk more about Roku when you come back, so that we can say that Koru.
Yeah. Roku
is a streaming
like
TV.
a vacuum or something, right?
Yeah.
Oh, Roku.
Koru
risk management. Yeah.
So we'll have to have you come back on and chat about it some more and
Appreciate it.
Educate us. We like getting educated. He's the coach, Coach Travis Robinson.
Yeah.
So glad to have you with us. We didn't even talk football this time.
I know. Well,
and the Super Bowl's coming up.
We're in OTAs. We have practice today, so we have a lot of colleges coming out and making offers to our kids at Bosco. So it's cool. So yeah, I'm heading I have a lunch meeting, and then I have an OTA,
Nice.
organized team activity.
Great. So glad you were able to fit us into your schedule.
For sure. Love it.
And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.